Hey everyone, it's Ryder from Skip. Breaking news today. The Federal Reserve has just released a report. Jerome Powell is live right now answering questions about the rate increase. This is what we've been all anticipating for months. It's why we've seen the stock market doing what it's been doing over the past few weeks. I'm going to talk about what this means for interest rates, for the stock market, and for the greater economy. He's live answering questions right now. We'll take a quick listen. And small business funding, I want to talk about some big successes we've been seeing with EIDL funding, including some folks getting up to $1 million with ad backs. I'll talk about all that. I've got a great video for you today. Be sure to watch until the end. Hit subscribe, turn on the alerts, and like this video so YouTube shows it to more people. I'm going to start with the breaking news. The Federal Reserve released this an hour ago, this press release. I'll briefly go through it. Indicators of economic activity and employment have continued to strengthen. And I'm going to read this whole paragraph because it's really interesting. The second sentence, the sectors most adversely affected by the pandemic have improved in recent months, but are being affected by the recent sharp rise in COVID-19 cases. Job gains have been solid in recent months, and the unemployment rate has declined substantially. Risks to the economic outlook remain, including from new variants of the virus, so they acknowledge the risks that remain. They acknowledge the strengthening of the economy, the inflation rate, and the improved unemployment. And here are the goals that has been driving the Fed's decision since they started doing these major stimulus actions in March and April 2020. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. So we know inflation is well above 2% right now, and the labor market is strong. The committee expects it will soon be appropriate to raise the target range for the federal funds rate. The committee decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. So there it is right there, an end in early March. Here's Jerome Powell. Let's take a quick listen to what he's saying here.
Back down to our 2% goal.
Back down to the 2% goal, as I just showed you.
A couple things. One, COVID is not over, and COVID can continue to evolve, and it's just we have to accept that it's not over, and the risks to it can slow down growth, and that's sort of a downside risk from a growth standpoint. I would point to another risk is further problems in the supply chains, which could slow down activity, and you see the situation in China as a situation there where that's their no COVID policy may cause more lockdowns, is likely to.
So he's talking about the risks there. He mentioned at the beginning there about trying to get inflation back down to that 2% level. That's their goal, the pros and cons, the risks that still exist. And he also mentioned earlier, the Fed does want to stay nimble, right? If things change, a lot of these things are unpredictable events. A lot of people are critical of what the Fed has been doing, basically overcorrecting, buying too much. Look at inflation, now reversing. Look at the potential for recession. Here are all the reporters on the live call right now. And here's why this is important. This is actually happening right now. The S&P 500 is dipping quite a bit just in the past 5 minutes here. It's going down. Here's how it is over the past week, over the past month, and this is basically correction level. And when I bring it into the year context, we can see the dip over the past couple weeks because of this expected announcement today, what's expected in March, and this will probably continue. Of course, Ukraine is a risk factor as well. Will Russia go to war with Ukraine? And then is that going to involve the West and Omicron in general? So Jerome Powell saying a lot of the same things. I can't emphasize how important this is. This is going to affect everyone watching this video. You might not be a macroeconomics wonk, but it's incredible how much power the Fed, namely Jerome Powell, has, and how it's going to affect everything. Not just your mortgage rate, your loan interest rates, or how your stocks are doing. It affects the entire economy. I would love to hear what you think about this news today. We've seen it coming for a long time, so there's nothing surprising here. So there it is. I want to end on some brief positive news, especially if you're waiting for an SBA EIDL loan. Still probably $100 billion left, we've been seeing EIDL add-backs work. This is a letter from a loan officer. Basically, someone we helped had $1 million approved because of add-backs. I'll share what add-backs are in a minute and how you can use them to increase your eligible EIDL loan amount. So this person was approved. They had a negative cash flow, but they were able to change that to get approved for a higher loan amount. If you Google EIDL add-backs, you will see our post. In fact, it's the first time I've seen this. Google has us as a featured snippet for this. So just Google EIDL add-backs, or I'll leave the link in the description. How your EIDL application can be approved using cash flow add-backs. If you've been declined because of, quote, lack of repayment ability, this is what you can use. We go into what is an add-back, which expenses are eligible. So this is the key piece here. What's eligible to adjust, so when a loan officer examines your cash flow, they see it as positive and you can get a higher loan amount. We go into details here, what numbers they look for. This is not tax advice or financial advice. It's how add-backs work, and we have an example calculation here. And if you want help going through this, what to include potentially, what to think about, how this works, of course, go to helloskip.com/join. Choose either the premium or VIP option. If you're serious about this and want in-depth help, go for the VIP option. We have folks available tomorrow and the next day to help you if you want some of these business loans. Like I said, we've been hearing a lot of reports this week of add-backs working, people who had been denied earlier on, finally hearing back from a loan officer and getting approved. You can also use the link in the description and you'll skip the wait list. That's today's quick update. We will keep you posted on the Fed interest rate increase, what that may mean for you. Most importantly, say hello in the comments, subscribe, give this video a like, and stay well, stay healthy, and I'll see you tomorrow.